Hello, Bong. Hello,
Okay, please.
Professor, Doctor, and everyone. This is my topic about auditing complex entities. And complex entity is the business that have feature or operation that make auditing more challenging. It can arise from group structure, financial instrument, listed company, and specialized industry. We examine how auditor navigates this complexity while maintaining professional skepticism and technical competence. Let's move to group audit, and the definition of the group audit is referred to audits of consolidated financial statement, including parent company, subsidiary, joint venture, and multiple division operating across various sector or country, IAS 600s. And for the key challenge is the multiple entity across jurisdiction with different accounting framework, whether it's auditor independent levels and inconsistent component audit work quality and communication gaps. For the group audit, the responsibility, define component maturity, communication with component auditor, review component works, and maintain overall responsibility for the group's opinions. And for the practical application or practical challenge with auditor meets, I think it's up to point that different accounting system and policy. It about its subsidiaries may use different accounting software, example like QuickBooks, SAP, Zero System, and some company use Excel. It's leading to inconsistency in financial reporting, data extraction, and consolidation processes. Moreover, accounting policy is simple like depreciation method or revenue recognition may differ across entity, requiring adjustment during consolidation to achieve uniformity. And I think it's for the group audit, each challenge is intercompany transaction lacking for more documentation is about many Cambodian groups entity fail to properly document and reconcile intercompanies like share, loans, and cost-sharing arrangements. This increases the risk of incomplete elimination or double counting or recording, which may result group profits and assets balance. And inconsistent quality of component auditor works is about subsidiaries may be audited by different audit firms, some of which might not meet the group auditor quality standards or might not apply accounting standard consistently. And these inconsistently make it difficult for the group auditor to place resilient without extensive review or performance procedures. And the last, I think, is the currency translation and tax compliance difference. It's about when subsidiaries operate in multiple currency like US dollar, like Cambodian currency, like Japan currency, like other country currency. Its translation of the translation of foreign currency operation can introduce error of exchange rates or translation method are applied incorrectly. And additionally, local tax rule, example like transfer pricing, like withholding tax, like VAT, is very across jurisdiction, creating risk for the both misstatement and compliance penalties. And for the group's audits, audit this application is not properly addressed. This challenge can result a material misstatement in consolidated revenue, intercompany balance, foreign currency translation difference, and tax provisions. For the audit financial statement,
Instrument?
no. For the financial instrument, financial statement, we need to check and reconcile according to
Here,
accounting
you move
standards.
your slide incorrectly. We need just still in 4.2. Yes. Okay.
Now let's move to auditing financial instruments. For the audit financial instrument is involved examining assets, liabilities such as cash, receivable loans, bonds, equity, and derivative. Due to their complexity and market volatilities, auditor must understand valuation, methodology, risk exposures, and closure requirement under financial instrument ISO 9, ISO 13 fair values, and ISA 5 and 40. For the key challenges include estimating fair value. It has 3 levels for the role of fair value estimates and complex model. Is the level 1 is the quoted market price. Level 2 is the observable inputs and unobservable inputs. And it is making assumptions about discount rates and credit risk and obtaining observable market data. For example, a Cambodian renewable energy company with USD financings and interest rate swap must assess embedded derivative and fair value, and often without in-house valuation specialized. Let's move to here. Audit of listed entity, and the audit of listed entity is a company with equity or debt instruments traded on public stock exchange. Their audits demand greater diligence due to heightened public accountability and regulatory oversight and transparency requirements. And here is the importance of public interest. This company accountable not only the management and shareholder, but it's also to the public investor. Is required transparent, reliable financial information for investment decisions. And regulatory body is the Security and Exchange Commissions in Cambodia and others markets. Regulator demands compliance. And creditor and financial institution is the rely on audited statement for lending decisions. And the last is the general public and media is the scrutinize public company and financial performance. Auditors of listed companies must uphold public trust by ensuring financial statements are true and fair and complying with CISOS and local security and exchange commissions requirements. Identifying maturity misstatements include frauds, properly reporting governance, and control weaknesses. The audit mirror must be included in the auditor reports under IAS 7 and 01. His is auditing specialized industry, and I have four or three sector to present for you, and now I would like to definition of audit in specialized industry is the refer to process of conducting financial and compliance and audits in a sector that operates under unique regulatory environments, complex business model, or industry specific risks. And for the key challenge of banking sector is required understand of NBC is the National Bank of Cambodia regulation along provisioning rules or CIOF 9 financial instruments, IT system, cybersecurity risk, and deposit classification. Example like auditing ABS bank includes testing or expected credit loss, more than risk, weighted assets, and classifications, and verifying compliance with the capital requirements. And for the insurance sector, key challenge is include estimating claim reverse in cost but not reported, reviewing accounting report with the complex assumptions, and ensuring proper premium recognition. Auditor often needs the occurrence specialized IS 6 and 20 to assess methodologies and assumptions. And the last is the non-profit sector about NGO is Kitchener is involved in impose restriction, complex report formats, and procedures, procurement, compliance testing. Example like I have client as the NGO is the MC or I don't know malaria consortium. Reconciling MC donor reports with turbulence, handling currency conversions, reclassify specific item in accordance with the requirement of accounting standard CISOF for not-for-profit entities, and verifying restricted grant usage. Well, let's move. Here's the conclusion for auditing complex entities, and it's the handle professional skepticism, comprehensive technical knowledge, robust coordinations, and tailored audit approach. Such as in audit, complex entity depend on procedures, discipline approach underpins by ethical integrity, strong leadership, and adherence to international standards. Firm must prioritize continuous technical training, strong documentation, practice, and clear communication among all stakeholders. That's all from me. Thank you.
Okay, thank you, Vidya. That's very nice presentation. Because I noted that my mind already present about the audit process procedure from A to Z and apply for all general company that we have discussed so far. Now we reach to audit of complex entity. Complex entity mean very challenging for auditor, especially for those auditor who begin an audit with, for example, like bank. Not easy. The bank will be involved with financial instrument, with the certain component of the bank that not quite easy because it is public interest entity. And a second, also very challenging for insurance sector, especially when you put here about challenging in estimated claim reserve. It is called IBNR, claim incurred but not reported. That's also need to specialize in doing this IB&O report. Usually auditor don't do this IB&O report when doing audit for insurance sector. Usually we ask insurance company to get IB&O report from third party, and then auditor place reliance on it. And not for profit sector, actually it is look like very simple, just income expense. But the problem is about accounting standard. In Cambodia, we use accounting standard for an FPE, which is called cash basis, but the head office of that NGO, for example, like international NGO established in Cambodia, but their head office in US or UK, and they use accounting basis, a different accounting basis. But Cambodia requiring, sometimes they use accounting standard for an FPE, so become challenging for auditor to do significant adjustment in order to meet the local requirement. So let me ask from your experience in audit, not for profit organization. Let's say in UK, they use the accounting basis and they recognize they recognize PPE, or they recognize income based on the accounting standard adopted in UK. But in Cambodia, let's say for the local here, the NGO, international NGO that register in Cambodia, and then they need to comply with cash basis, which is an FPE. Can you share what is the challenging with this different accounting standard? Can you share the specific issue that you learned from year to year?
From my idea, I think it's the classify certain item in accordance with accounting standard, like classification of specific expense to capitalize, and I think it's verifies all restricted grant usage, like is any fund are found to be unused, unspent, or diverted
My
from.
question is about in Cambodia, that organization choose cash basis, but they have global system, and then they record modified cash basis.
Vuochnea, may I have you on this one?
Yes.
Because I have the experience for this one. For example, WF, we have headquarters in Switzerland, and we use Swiss GAAP, which is pure accrual, and Cambodian standard require us to record into cash basis, but we still use SME for our ACA report. So there are three main things we need to consider. First, about income recognition, because accrual is always recognize income whenever transaction occur, while cash only recognize when cash is received. That's the most important one, recognition of income and expense. Second one is about asset depreciation. Normally, as country office, we don't use depreciation, as we judge all the asset purchase into expense, because we receive fund from donor, which is not applicable for accounting standard, both for international and country in Cambodia. So at the time that we do a report, there must be two separate ones. We assessing the value of asset we have, comparing to the asset to be depreciated. So there has adjustment at the end to ensure that the cash spend and the income are balancing. And the third one is the the disclosure of any accrual spent at the year end, which cash basis is not accommodated. So it very challenging, and that's why ACA has too many degrees or any broadcast how to recognize or do accrue some of the expenses at the year end. I think that's all from me.
Yeah, you're like expert. You're
May I
very clear,
share?
very clear.
May
Okay.
may I share some more?
Yes.
Regarding NFPE, refer to cash basic. It means no asset or liability account except cash and bank. Normally in Cambodia we use accrual basic, or sometimes we call modified cash basic. Some accrual and some cash basic, and they do what they normally do, like modify cash basic. When we do audit, we need to propose adjustment like liability. We try to eliminate liability, whether should be recognized as income or asset recognized as expense during the year. It's sometimes the organization have many donors, and when they record one transaction, they split too many small transaction, and then we try to collect all the transaction together and make the adjustment. It's the difficulty for me for NGO.
Okay. Thank you. Here, understand. For those NGO choosing pure cash basis, I need to eliminate account payable or receivable, that you learn very challenging in finding the real nature of expense that not paid in cash, but to be paid, but it is after cut-off date. So that's why you need to find those AP and related expenditure with that AP or AR or advance. Understand? And so Pons mentioned about the IFRS for SME, for those NGO choosing that standard and then having a lot of challenging as well, because they need to comply with the global accounting procedure, and then really difficult for specific sector like not-for-profit organization. So I understand with this. Thank you for your support with you. Your very good presentation and support, and here you add very good explanation and very good clarification. I don't have more questions, so can we move?
Dạ, bon.
Okay.